to your point, like if there's a buyer out there right now, would you tell them to wait?
No,
Or would
yeah.
you with low inventory to purchase?
Yeah, right now, I mean, right now there's a cost of waiting. So I'm actually, we send something out, we send out a weekly update to our realtor partners on, every Friday. If you're watching this and you're not part of that list, send us a message. We'll add you on there. And what we talk about is what rates are doing and, what we're seeing on the market, guideline changes, program changes, things like that, just to keep you informed with your customers. What we're looking at is there is definitely going to be a cost of waiting at this point. And we talk about cost of waiting, when rates are moving and when home prices are moving. So the cost of waiting over the last couple of years has not been so much on the rate side because rates have been coming down. It's been on the price increase, right? The house that you're looking at, the house that you were looking at 6 months ago.
The most it's ever going to sell for is selling.
Right. Yeah.
More. Yeah, we're seeing.
And we were having these conversations 6 months ago, and we said, okay, well, this house, that you were looking at maybe 500,000, back in June is now going to sell for 520, 525, right? Will values keep going up the way they're going? It's tough to say. I mean, it can't go up 10, 12% a year, you would think. But again, supply demand, it's driving prices higher. There's more competition. There's more offers going in. People are waiving appraisals. They're waiving mortgage contingencies. They're doing everything they can to get that property because there's nothing else for sale and they don't want to wait anymore. So now we're seeing cost of waiting on price increases. So if you're looking at a house that goes up just $10,000 in price, that's going to cost you $45 to $50 a month in payment, right? So $20,000, it's $100. It's a great rule of thumb, right? Every $10,000 on that price is going to be $50 in payment. But what we're also seeing is now rates are under pressure, right? Rates have gone up about 0.5%, maybe a little bit more. They're under a little bit more pressure today after the Fed announcement at 2 o'clock. But we're seeing those rates move higher, and it's a pretty clear shift to higher interest rates. Now, when we look at the rates historically, they are still going to be historic lows, right? But instead of locking a rate at 2.875, you might be locking a rate at 3.875 or 4%, 6 months from now. Yeah, well, listen, when I remember when rates dropped below 5 for the first time, and everybody was losing their heads in our industry because they said you'll never see this again, and you see how low they actually went. It's affordable money, right? It is a fixed rate. It locks in the big bulk of your housing expense, the principal and interest on your mortgage, right, which is the biggest debt that you're going to have at that low fixed rate. You don't have to worry about it increasing over time. It's historically low, right? Even if we see these rates continue to move higher. So, average rate at the end of December, probably around 3%. Today, it's probably closer to 3.5, 3.625. Me personally, and we talked about this in our videos on the weekly updates, I see the shift continuing through this year, probably closer to 4%. And then it should steady out. I think, it's going to take more time and more economic data and for markets to really see how the Fed's going to be able to implement their policy shifts for rates to go, just shooting up much higher than that. But there's always risk. I don't see too many scenarios where in the next 6 months we come back lower to the point that we were, at 3% or lower on the 30-year fixed. So there's a cost of waiting that way, right? If we're looking at a $500,000 mortgage, that mortgage today is, $180 more a month than it was, back in December, right? Because the rates have gone up 0.5%. And
like it's a PSEG bill here.
Right. Yeah. So when we work with our buyers, we're always talking budgets. A lot of times, what a bank can qualify you for is more than what you're actually comfortable budgeting on a month-to-month basis. So we talk about budgets. We want to make sure that we're comfortable with payments. So that's still part of our process. But if your budget is $3,000 a month for your mortgage payment, right? 6 months from now, if rates are higher, right, you're not only going to be able to afford less house, but that same house that you could buy potentially today might be more money. And now you're losing that flexibility on both ends, both with the monthly payments and then also with the purchase price itself.